Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stock Trading Pro. In today's Stock Market Live, we have actually something really interesting. And the question is, when something does not happen, does that actually mean that something happened? We had super interesting price action in the market yesterday. We are much more trading stocks right now for short-term cash flow. The bigger picture is a little bit murky. We did launch a new swing trade yesterday. I'll walk you through that just so you get an idea of some of the setups that we're looking at. But the Doji candlestick that unfolded in the S&P 500 yesterday, which basically means that it opened and closed after 6 hours in the same exact spot, which means that really there was massive indecision in the stock market yesterday. In today's Stock Market Live, we're going to review the stocks that held the bid. And we actually had a good conversation about that yesterday, what it means to hold the bid and how that translates into some new stock picks for today. So we got a big list of the best stocks to buy now. Plus, I'm going to actually give you this sheet today. You can see this is the research document that I have every day. And also the list of stocks in play. One of the biggest questions we get about which are the best stocks to buy now is how do you build those lists? And it's very, very simple that simple, but it's 90 minutes to 2 hours worth of game planning every day, scanning, hitting everything from different angles to find the best stocks that I'm looking to buy now. So today's Stock Market Live is going to take you a little bit into the research, take you a little bit into the price action. We're going to talk about Nike earnings and whether or not that's a buying opportunity, despite the fact that the stock is in a much, much longer term downtrend. We're also going to talk about trading setups yesterday, where I went into the day completely watching the stock market, ready for it to roll over yesterday. Some stocks did, some stocks didn't. I had a bearish mindset heading into yesterday, but the market did not roll over. And that's a big thing we want to talk about today, because there's a massive difference when you're looking at the stock market, having an opinion versus having a bias. And I'm going to explain the difference between those two when we get right back. So stick around. I'll be back in just 1 second. Okay, so thank you so much, everybody, for joining me today. I really, really appreciate it. The Stock Market Lives are probably one of my favorite times of the day. A lot of work goes into it, but I love doing this. I love the interaction. I love meeting new people, especially the fact that we can speak to people on different sides of the world, which is just absolutely amazing. When I had my office in New York City, it was just who was on that block, and those are the people you met at Starbucks. Now we're talking to people in China, India, everywhere. It's pretty awesome. I just want to make sure I say hello to Juan Garcia. Good morning, pal. And John Weinberg. Good morning. How's it going? Hope you're doing well. So first, I want to talk about the SPY and the price action in the market yesterday. First, obviously, I'm going to talk about today's video. Everything we discuss here is for educational purposes. It's up to you to make those final decisions. But let's head on over to the market, and we're going to actually do a deep dive. You can see the futures are actually up 16 points at this time. And that's actually a big thing that a lot of people ask us as well, is the process. What is the structure of the way you attack your day every morning? And what do you look at first? So if you don't know the process of how I attack the market every day and look for the best stocks to buy now, what I'm essentially doing is I do my game planning on the sevens. Obviously, this Stock Market Live starts at 7:30 in the morning. So I've kind of pushed that a little bit earlier in the morning. But no later than 7 p.m. at night is when I finish my game planning at night, do my 90 minutes of research. Then the next thing in the morning, I wake up, usually around 5, pour the cup of coffee, and I start out on a couple of different sites before I even go in to check out what is going on in the futures. So I go to StockTwits, I go to Twitter, I go to the Wall Street Journal, I go to Barron's, and that's not really to get ideas. I want to make that super clear. Really confident stock traders are not going to CNBC to look for trading ideas. Maybe you're going there to get a tone of what's going to unfold in the market. Maybe you do see something you didn't notice, but I can't get this across strongly enough. In order to maximize your monthly P&L when you're trading stocks, it is critical that you have conviction in your ideas. And hold on, that might be my mom calling. I'm going to put that on pause. My sister just bought a house. Excuse me. Sorry about that. So we all know that there's going to be some trades make money, some trades don't make money. It's the trades that make money that are probably holding you back right now. And what I mean by that is, like, I don't understand that. How are profitable trades holding me back? It's simply because on the good trades that you get out of too soon should be the trades are the ones that actually pay you. So I want to say that again, just in a different way. You need to make more on your winners. There's no other way to put it. And the only way to make more on your winners, and you don't want to turn $1,000 trade into a $400 trade. You want to turn $1,000 trade into a $2,000 trade. And in my experience, the only way to do that consistently, which is a big part of what everybody's looking for, is consistency, is you need to do game planning on your own. You need to have an edge, and you only look for stocks that match your personal criteria. I can't get that across strongly enough. So if you feel like you're doing, oh, hello from Spain. That's super cool. Hey, Ray, good morning. I'm sorry. Where else we got? Duncan from Manila. Good morning, Duncan. Welcome to the community. I'm sorry for going off track there, but I love when I get to see other people. Adrian from Sweden. Wow, this is super cool. That's awesome. Thank you. I really, really appreciate it. So anyway, the point that I want to make is, assuming that you are okay with understanding something that we discuss all the time, which is that a trading edge means that most of the time it's going to do what you expect. That also means sometimes it's not going to. So if you elevate your trading mindset and say, okay, if I put on what I believe is a perfect trade, what I believe is one of the best stocks to buy now, I reviewed the stock market, and this is one of my stock picks. If you put that trade on, the edge means most of the time. So the key to being profitable is recognizing the fact that sometimes it's not going to make money. Take those losses very quickly, but then get to the other side and make sure you're doing your game planning and making more on the winners, which kind of takes me into the current market conditions and that big Doji candlestick that we saw on the SPY ETF, the S&P 500, the SPX, whatever you want to call it. So what's kind of interesting here is it told us nothing, but it also told us something. So if you don't know what a Doji is, I'm just going to pull this up on the chart so you can actually take a look at it. This is the futures now overnight. So we're actually rallying pretty hard. You can see they're actually up 13 points. What I want to point to is yesterday's chart of the SPY. Okay. So here's yesterday's candle. And the point that I want to make here is, again, if you're a regular viewer of our channel, we're very clear that there's only two candlestick patterns that really matter, that make trading really, really easy. And that's an energy candlestick or what we call a melted candlestick. You might know a melted candlestick as a Doji. But what's the significance of it? A Doji means that on a day, a daily candlestick, it traded for 6.5 hours and basically opened and closed at the same price, which means that there was massive indecision in that time frame. So if we go over to the SPY ETF from yesterday, you can see all of this price action. Let's actually zoom out to a 5-minute chart just to really bring this point home. And I'm going to bring in a horizontal line. This is where the S&P 500 opened yesterday, and that's where it closed. So you can see it opened, traded, and 6.5 hours later ended up at the same spot, which is what this Doji candle represents. So now if you watched, if you watched our live stream yesterday, you know that I went into the day yesterday with this bigger picture mindset that we're still in a bearish order flow with bullish momentum, which meant that we had a little bit of conflict. So what I want to get across, and that chart of the S&P 500 is definitely something that you want to print out, because we have long-term bearish order flow from the end of December right up until last week's Fed announcement. Now, Jerome Powell actually came out and squashed the market again yesterday and made it clear that they're going to raise, and they're going to be aggressive raising interest rates simply because of inflation. Now, obviously, simple is relative, right? So what should have happened yesterday? Even with Jerome Powell coming out in the middle of the day, making this conversation here, just the market just absolutely imploding. What should have happened? We should have sold off and stayed there. What should have happened after the Fed relief rally and we hit resistance levels on a lot of the key stocks? We should have went down, but we didn't. So that's a big part of understanding how something that does not happen is actually a trading signal to pay attention to. So how does that translate into trades for today and for this week? Well, it essentially means that because we have conflict means a longer term move to the downside versus a short term aggressive move to the upside. We are not in harmony. So the price action now is not matching the bigger picture price action. So that means that you can still take short-term trades with confidence if you build a good argument to be a buyer. But because there's conflict, that would mean that you would lower your initial profit target, because the reason we put on a trade is we have expectations of it following through. But again, we're going to walk you through this. If the bigger picture looks like this, but we want to be a buyer because of this, the odds of it continuing higher are lower, but in the short term, it's possible. Is that a mouthful? Well, it's just stuff that we all need to learn as traders, because what we're essentially doing, and this is something to write down, is we are creating trade expectation. And what trade expectation means is when the smart money is buying stocks over time and the current price action is also going up. So I'll show you a picture of that. We're going to take a look at CVX because it's probably one of the better examples, or maybe even CF, which has actually been in some pretty good bullish order flow, which you can see broke out again yesterday, or even Caterpillar more recently, but I think CF probably a better example. So you can see this pause right here, right? The stock traded nice bull flag, pulled down, paused, and then had two bullish moves after that. So that's the short-term price action. This is the short-term price action. But what we want to do is confirm that the higher time frames from 1 week to the next is then validating what's going on from 1 day to the next. So what I want to walk you through right now, it's kind of an advanced lesson, but I think it's kind of interesting because this should be setting your mindset and the way that you game plan from day to day and week to week. So I'm just going to give you like the most basic fundamental outline of understanding order flow and how order flow being obvious in harmony or in conflict, not in harmony, how that should affect what you expect to earn. And if what you expect to earn is being adjusted, that means the amount you're willing to risk should be adjusted. Now, doesn't that just kind of make sense that if what you expect to earn changes based on how obvious the order flow is, doesn't it stand to risk that once you understand how to read the market and say, this is an awesome idea, I'm going to put a little bit more into that one, versus this one, it's an okay stock to buy, and I could see the trade, but it's not perfect. So the first deal's awesome. You like open up the wallet and maybe get a little bit more aggressive because it looks perfect. The second one is okay, but because it's okay, you would put a little bit less into that deal. So if you think of something like a real estate investment, we have this amazing house that you could buy at a discount, you put more into that because there's a good chance that you could make money. Then there's this other house that you have a lot more work to do, and maybe what you could make on it's not as much. You try to get away with not putting as much into the deal because it's not as likely to follow through, or simply the reward is not as good. So I think it's important that if this topic is new to you, maybe watch this part of the video again, go back a little bit later and watch this, because essentially what we're doing, and again, this is the thing I want you to write down, trade expectation. What is the odds of me earning a profit on this trade, and what is the right risk for the odds of me getting that profit? Okay, now I'm going to show you what I mean by that. We're actually going to break it down in a couple of charts. So we're going to work our way over here, and we're going to just simply pull up two different charts here. We're going to make this one the weekly chart, and we're going to make this one the daily chart. So what we are looking for is from 1 week to the next, we are looking for follow through on the buying. We're looking for the smart money to pay higher prices and what we call hold the bid. Let me actually fix this so the charts are the same. Okay. So you can see here 1 week to the next, 1 week to the next. And now from here to here, obviously it's the same price action. But what I want to talk about is last week. If we go there and we take out yesterday, look at the difference between this week of buying and the follow through and the expectation you would have, because the higher time frame, which is a longer picture of smart money buying, is in sync with the short-term picture. Those are the opportunities where you would expect to earn more. Last week, and quite frankly, the week before that, unfolded like this. So because the big picture is less than perfect, that would mean the expectation for follow through, the amount you could make on the trade, is lower. And that's a really important thing to understand. What I want to walk you through right now, you should be able to set this up on your charts. It's called multiple time frame analysis. Put a weekly chart and a daily chart, and whatever color the weekly chart is, and the stronger the color, meaning it's got a big body, that will give you a little bit more confidence on the daily chart for your swing trades or your day trades to be buying that stock, simply because more buying happened on the weekly chart. So wrap all this up into a nice, good financial education lesson here. If you're looking to day trade or swing trade, the greater odds of following through in the direction of that stock you plan to buy, the greater the odds, the greener the weekly candle. Consecutive weekly green candles also increases the odds. So when you go to your stocks to buy them, you should only be looking to buy the stocks that are already doing what you want them to do. So what's kind of cool about this now, before we get into the actual list of stocks today, I want to just do some quick visualization. When now, hopefully I've trained your eye. We've talked about well bid, which is higher highs, higher lows. We've talked about from Monday through Friday, green equals buying. Bigger green means buying throughout that entire week. That's the first thing you do before you go to look for an entry. So we're going to go over a couple of charts right now, and we're actually going to pick out some stocks in the Dow. So we're actually just going to click here and actually, hang on. I'm not sure why that's not updating. Okay, there you go. So we're going to actually go over here. We're going to start out with DOW, and we're going to pull this over, and we're going to take a look here. Okay, so here's last week, less than obvious, right? That this last week's candlestick is very different from this one or this one where it was green most of the week. So last week was not really that obvious other than this one candlestick. Go to Travelers, TRV. Last week, pretty good price action. Last week, we followed through. Apple, last week, good price action. Apple, a solid buy last week. The week prior to that, all selling. So do you see how just nothing more than setting the tone before you buy changes everything? There's obviously more to it, but I want to try and keep giving you more strategies that make it easier for you to make a decision. We have a lot of people that come through our community, into our Discord community specifically, and the biggest problem is overwhelm, trying to find everything in the stock market, and it makes it really confusing because you're trying to look for everything instead of trying to look for something. So if we can give you some strategic advice right now, if you're looking to day trade, look for stocks that are at least green on the daily candlestick. If they're not green, don't even look to buy them. If you're looking to swing trade, go to the weekly chart and start only with stocks that are green on the weekly chart. Then you go back to the daily chart or the hourly chart to look for entries for swing trades. That's probably the easiest way to feel like you have control over your trading, because now you're no longer buying stocks going down, and you now understand how to track and piggyback on top of the smart money that's actually pushing that stock higher in the first place. So it'd be kind of fun for you after this call or whenever you happen to be doing it, put up those two charts, put up a weekly chart and a daily chart and sync them together and start typing in the stocks that you watch and say, oh my gosh, what was I doing? That thing was red for the entire week and I was looking for a spot to buy. Versus you might find a different stock that was green for the entire week. And you're like, why wasn't I buying that one? And I'll show you one more final example here, which was Alcoa from last week. You can see that obviously it gapped here. But if you see last week compared to the prior week, this week you would not have been looking to buy it, even though the stock rallied for several weeks in a row. But last week, there was mostly selling, so you would not have been looking for an opportunity to buy. Little things like this just make trading so much easier. Now, you still have to understand how to make money and manage position size and that kind of stuff. But I will tell you that half the battle in stock picking is being in the right stocks. Then you fine tune your position size. You learn how to hold on to winning trades. You have the discipline to kick out the losers. But trading certainly elevates your confidence and, quite frankly, how much fun you're having in it when you're in the right stocks in the first place. So many new people come into trading trying to pick tops and bottoms because they think they're going to get the biggest part of the move if the thing reverses, instead of just making the easier trade where it's already going in that direction, and then you simply hop on board. Which takes me into the document that I'm going to share with you right now. This is my research document. It's only valid for today, for Wednesday, but it'll give you a nice template for it. I posted this in our Facebook group. So if you happen to be in our Facebook group already, you can go and download this in the Facebook group. If you're not in the Facebook group already, it's free. There's nothing for sale. You can get the link to the Facebook group in the description below this video. So I want to show you the document because I built all that up to walking you through ideas that are valid now. Then you simply look for ideas, entries. But here's the thing I think that's the most important. We just used Alcoa as an example, okay? We talked about all of this buying, and you would literally be looking for buying opportunities on the daily charts while it was going up during that window. But this week right here, it was below the opening price and selling came in for the entire week. Now, this is where smart traders get in trouble, where you don't recognize that the tape changed and you are no longer looking for buying opportunities here until it reasserts itself back in the direction that you're looking to be a buyer, which takes us over into this research document. So what you can see across here in 3 different columns on top of these guys over here, this is my research. You can see it was updated last night at 8 p.m. last night. So I got finished a little bit late last night because we had multiple coaching calls. But you can see these are stocks that have the top bullish order flow for the month. These are stocks that have the top bullish order flow since yesterday's opening price. And this list is much, much bigger because of the bullish momentum we've had recently. These are stocks that have the most bullish order flow over the last 10 trading days. So this is a tiny slice of understanding how to stack the order flow before you go and buy stocks. The mistake that a lot of traders make is first they look for entries and then they hope the stock moves in the direction they want it to. The way that it's much, much easier to trade is find a stock that's already going in that direction and then find a spot to hop on board. It is so much easier to get on the train that's already going in that direction than trying to pick a top, pick a bottom, get involved when it's in the middle of nowhere and doing nothing. Do yourself a favor. If you're already in our Facebook group, as soon as this call's done, you'll be able to find it in there. If you're not in our Facebook group, it's called Top Trading Pros. Go down and you can click the link, in the description, it says Top Trading Pros Facebook group. I'm going to put this document in here so that you can use it as a template for today. And it has a big list of stocks to buy now, but then you have to go into each one of these stocks and see which ones meet your personal criteria. But if you go all the way back to the beginning of today's call, we were talking all about trade expectation. So these stocks have an expectation of continuing to go higher because they're already going higher. Now, here's the final part of this lesson. Alcoa is a good example. They had the same expectation of going higher until it started to trade below Monday's opening price. So now every stock that we look at, yesterday was Monday. So now all of those stocks have an opening price. So this list of stocks that I'm giving you right now, they're all above that opening price for Monday. So what you need to do now is find the stocks in this list that meet your personal criteria. And then as long as they're above that level, then you can look for day trades. Then you could look for swing trades with the expectation of following through. But I think this is actually one of the most important things right now is the fact that if it rallies and then pulls back, you already know where you're getting out because that same price which makes that weekly candle green or red, is the price that matters to you. So if it's green and you buy, there's expectation for follow through because these stocks already have bullish order flow. If it's green and you buy and that candle turns red on the weekly chart, you're like, okay, didn't follow through and I'm out. I'm giving you this at the beginning of the week. I'm giving you this spreadsheet of the best stocks to buy now because this is the list I'm looking at today. Then I put these lists into my software. I happen to use TradeStation software. And then I let my software tell me which stocks are in play right now. So you start out with the bigger list of stocks to buy now, put them into your watch list. So that means the only stocks that went into your watch list are already ideas you would consider buying. So then after the market opens or after the week opens, now if your watch lists are sorted properly, the best of the best will just float to the top. That makes it a lot easier to be trading the right stocks at the right time. Okay. We're also going to talk about Nike this morning. Nike actually had earnings. And what we're going to do here is talk about the big picture. And this is actually a pretty good example of what we're talking about. You can see much longer term bearish order flow in Nike. It's up $7 and change right now. But what's interesting is last week, buyers stepped in. You had a bullish gap rally yesterday held, and now we're all the way up here at 137 and change. So that we actually got follow through. So remember what we just talked about at the very beginning of today's Stock Market Live. Does your stock have harmony or does your stock have conflict? If you can build an argument that it's harmony, where the weekly and the daily are pointing in the same direction, you can get in there with conviction and maybe expect to hold that trade a little bit longer. If the short-term picture is trading against the long-term picture, you can still validate an idea, but your profit is likely less until more time pushes that stock in that direction. So how does that translate into Nike today? So I'm going to go over the exact price levels that I'm going to be looking for Nike and the expectation for profit targets in Nike stock today after earnings. So we've done this example quite a few times with stocks that have reported earnings or had news. So right now you can see Nike's up at 137.30. So somewhere right up in this area over here, give or take a little bit. That's actually where it's going to open up, 137 and change. So maybe just a little bit lower than that. So without even knowing anything about what's going to happen later, nobody knows what's going to happen later. We have to go into the day with one expectation that we plan to trade. Okay, that's it. One expectation of how we plan to trade. And that expectation is going to come from the big picture. So we have the big picture going down, short-term reversal, and a bullish gap on earnings. So if we're going into the day, let's say you're in my office, let's say you're in my Discord community, we're having a conversation about Nike today, and we're mapping out how we plan to buy Nike stock today. Well, the big picture is down. Last week was green. It traded above and stayed there for the full week. And this morning, it's rallying. So we have long-term selling, short-term buying, plus earnings gap this morning. So I will be looking to buy Nike as long as it stays above 137 and then maybe even look to swing trade it. But right now it's going to be a 1 to 2 day trade as long as it's above that level. If Nike opens higher, which it looks like it's going to, and trades below 137, that will most likely mean that today's candle is red. So I'm not looking to be a buyer because it's not doing what I wanted to do in order for me to buy the stock. That part that I just said is by a mile one of the parts that is so easy to understand, but does not enough traders take action on it. And I want to say it for you one more time. We just outlined 137 as of right now as the level I'm looking for Nike, or whatever exact price is that stock opens today. If it opens there and stays there, I'm going to look for buying opportunities, because that means that last week's buying, which is a green candle, and we'll just point that out again, last week's buying, which was a green candle, plus today's opening gap, which is going to see the stock open up somewhere up in this area, This buying and this buying is short term against this. As long as Nike stays above here, I'm going to look, because buyers have now stepped in and they're what we call holding the bid. So here's the point that I want to get across. That's the game plan, okay? If Nike opens up and that daily candlestick is red and they don't hold the bid, so in other words, new buyers do not step up after the open, then I'm not going to buy it. If it's not doing what I want it to do, I am not going to force a trade simply because I did research on it last night and this morning. I will then just go to the other list of stocks that I'm giving you right now. And when one of these stocks floats to the top of the list in my watch list, those will be the stocks that I end up trading. So do you see how there's two different styles of trading going into the day? It's still game planning, but the only difference is we have a very specific game plan for Nike off of the way that we just read the order flow. Then we have other stocks. Again, this list right here, strong for the month, order flow for the week, and momentum for the last 2 weeks. So those stocks don't necessarily have a pattern the same way that Nike does right now. They've just exhibited bullish order flow, buying pressure by the smart money over the month, the week, and the last 2 weeks. So they're already going into my list because they're strong. So I've tracked the order flow now. Now my next job is just to piggyback it when it slows down and gives me a chance to find a good entry. So it's kind of cool the way you break all this stuff down. But really what I'm trying to get across here is trading could be as simple as you make it if you understand being prepared is the hard work. So preparation is number one. Developing an edge, which means you think something's going to happen more often than not, and then actually trade that edge to get feedback and prove that you can follow it. Once you have an edge, which obviously my edge is order flow and reading the tape, then you only go look for stocks that match your edge, and then you look for entries. So what you're ultimately doing is you're only taking good ideas, because the only stocks that go into your software are the stocks that meet your edge. So then winning trading comes down to being prepared, kicking out your losers, and then learning how to hold on to the winners. So I'm going to post this right now into our Facebook group. You can download this document. You go into file. Actually, let me show you how to do that, just to give you a heads up. You go over to file and download. So you want to download an Excel copy for yourself, and then put these stocks into your watch list. You can see there's also some other ideas over here as well. So look, there's a lot of stuff we talked about today. If this stuff is new to you, definitely watch this video again, take some notes. And if you have any questions about what we talked about today, either leave me a comment in the Facebook group once you get in there and download the document, or do it right here underneath this video on YouTube. And I promise I'll get back to you as soon as I can. Okay. Have an awesome day, everybody. I really appreciate you joining me here today. And if you haven't done so already, make sure you hit subscribe and give us a thumbs up if this lesson helped you today, as well as if this list of the best stocks to buy now matches your personal criteria as well. Take care now, everybody. Thank you so much.